Hello, everybody. My name is Ben Maldonado, and this is the Plus3 Commodity and Futures Show. It is Saturday, the 20th of November. Thanksgiving's next week, and I'm here as always with my partner, Barrie Hederachi. Hey, Barrie, how are you?
Doing pretty well. It was a
Good week?
it was a busy week. Most of it in commodities. Trying to wrap up taking profits on some of these things that we're squaring out, topping out. Some of the things we've been talking about, right?
No question. I mean,
Like wheat and coffee and
yeah, it's interesting you mentioned that because in the review of the charts, there's some shifting going on, and we'll talk about that when we review them. But we are at a very interesting juncture, and there was a lot of profit taking this week done by us, and let's talk about it when we get there. But let's
and it
start
looks
off.
like some other people also from
Yeah,
the
yeah, and it's interesting, and you and I had this discussion previously. It looks like it's quiet, right? It's quiet selling. Nobody's stampeding. They're just kind of sort of. I always like to use the analogy of the house party. It's the guys who know the cops are coming, so they're slipping out the back door while everybody's draining the last keg for that last bit of beer that's left. That's what it kind of feels like we're at this stage.
Mhm.
And I think a good poster child for that is Bitcoin. I mean, we talked about Bitcoin last week, and we were in this bearish wedge here. Wondering whether it was going to try to make one more push up and break out. Well, we broke down from the wedge. And more importantly, we couldn't hold this, just under 60,000 level. We broke through it, and now we're stuck under it. So as long as we're under that, the risk here in Bitcoin is that we're going to come down and minimally see that this half square here, at around 50,600, 50,700. So this is, again, another example of, a bullish market sitting at its highs and the selling starting to come in, but it's quiet. It's not a major correction. I haven't heard anybody panicking or worrying about Bitcoin crashing. But this is a setup for weakness. And we're starting to see this in a lot of markets. What's your take here on Bitcoin?
Well, I think breaking that trend line was, the false break potential at the half square. As we called it out in real time, that was the first sort of the, shot over across the bow, right? And then we were looking at the trend line break. That was the second sort of the warning sign. And the third would have been at 60,000, being able to hold above that, consolidate, or recover that very quickly, which it couldn't do this time, and that reversal was hard. So now it looks a little weak. Now, of course, it's possible for it to recover 60, on Monday on some news, but looking at the pattern, generally the whole structure, it looks like 50,000 is not out of reach, at least to finish this leg.
I agree with you. And like you mentioned, we had, in other markets, we had a good square up here from this low in June. We were 144 in time, and I forget what it was in price, but it was a good square that we, you can see it on the half square there. So this was a good high squared out, and now we're seeing some weakness come in. And that's a common theme that, when you flip through all these different markets, we're kind of picking that up. So it certainly is something to notice and watch and monitor.
Definitely. Especially now that it's under 60, you have to really watch to see.
No question.
Because, if Bitcoin goes to 50 and possibly fail, that could affect a lot of other things. So I would watch this.
It would certainly affect the animal spirits and people's, sort of perceptions of risk taking. And that's an important thing at this stage as well.
Exactly.
Well, let's jump over and take a look at the big five with you and see what you're seeing and what you're looking for this week. Man, that level is good. That 46.93 that you identified a while ago is really, really acting well.
It was it was an interesting level because it didn't quite settle under it and it didn't quite settle above it, right? It was like a mean reverting point and just kept wrapping around that all week.
Yeah.
One or the other, and which ended up just being a whole bunch of chop right around it.
Mhm. Absolutely.
Um, well, that's there, and that hasn't gone anywhere. We're going to have to carry that over into next week.
Yeah, for sure.
Just because it's there, and the price hasn't really left it. But there are some other things that's coming to play. One of the things I want to talk about is this calendar day chart, which is a 45-day cycle count into these highs last week, right? And earlier we had a 36 going into his first high and the gap right there.
That's right. Yeah.
And now we have, the second important cycle, which would be the 45, and we're right there. Remember, we talked about the importance of the 5/8, and we're 5/8 and the 45 mark. Super important. All right. So I would say the key thing here to watch next week is if we can take out the 5/8 level, which is around 47.10. And if we can take out 47.10, by default, that means we're settling above the 93 level that we were watching this week. I would say the markets would be in a good place to rally and maybe even get up to the 90, especially because after a square, if we take that square highs out, it's very bullish. But if we somehow manage to fail to take it out in the first couple of days, then I think we're setting up a possibility for the market to consolidate in this area above the half square, which would be around 46.20. So 46.20 would be the support area. And for some reason, if 46.20 goes, then I think, we have a much larger issue to deal with.
Right. I like that 47.10 number because I was looking at my notes. The weekly square resistance I have is 47.13. So we're in sync in that number with that number.
There. Yeah. So that 47.10 is very important going forward for resistance, and also 43. I think this 46.93 is okay to watch, but we know it wrapping around it. So between the two, I think we can figure out which way it's going to lean early on in the week. That's pretty much what I have, and for the S&P, just to keep it simple, this half square on the daily, that's that 46.20 area, okay, and that's where we tested on the pullback. So that's the key level to watch, and if that goes, and that we're talking about the low on the 10th goes, then we're setting up an entire new leg to the downside, and all this bullishness is going to sort of dissipate. Okay, so that's anything you want to add to that?
No, I think the levels are rock solid, and that the first battle is that 46.93 area. The winner there is going to give us the next short-term move. So we just got to watch and see where price decides to go in relation to that level.
And then watch this 47.10 area to see if we can clear that. And if we can clear it, then upside. Otherwise, if we get stuck below this 46.93, then I would expect a little bit more downside before doing anything.
Agreed.
And it's also possible we consolidate, but at least now we know the boundaries where it could, where this could go down. So let's take a look at the weekly. And timing wise, weekly is kind of, we have, we talked about the 45-day run off the lows earlier. But on the weekly, going back to 2016 low, we're hitting a square up here, half a square of a square of 52, which we can say, it's not a big deal, but everything counts. And then coming off of the crash lows from 2020, we've done 3 squares up, square of 52, right into these highs. So this is not to be taken lightly. And this is why, next couple of weeks, we really have to watch this. Either we're going to get on top of this, which would mean that's where the numbers like 46.93 and this 47.10 comes in handy to help us gauge that, if we're settling above this line or not. Or if we can't get through this, then we can definitely expect some kind of a pullback on even a weekly level. Right. So that's kind of an important thing to watch.
We really are at a major decision point here. You could see it.
Well, yeah, for me, anytime the S&P comes into some kind of a square or a time count, like the 45 here, it's a decision point. And usually when that happens, some of the other markets are also reaching similar cycles, right, on their own time cycle. So that's something to watch. Going in, looking at bonds, last week we talked about this 160.20 level being important, and if we can hold above it, and of course bonds are being bonds, we would just kind of danced all around it, just like the little consolidation late October, early November over here. And now, it's in a spot where however we break from here, it's going to have to probably run, just the way momentum and everything is set up. Because if we break this downtrend line, it's definitely going to be a visit to these lows, the 157 area. And if we can hold this 160.20 and make a run back up, and we take out these highs, I think bonds can have a whole entire another run up and take out these highs. So it's really up to see how we handle this high, early November high, on the 9th. And the reason that we could expect that is because we're going to be, we would expect that if we hold 160.20, which Friday, we kind of dipped into it, but managed to stay above it. So we really have to watch it next week, how we do. And if we're trading above this 160.20, Monday, Tuesday, I think then we have a shot at moving higher and testing these highs and maybe even higher, maybe a big old ABCD up. So that's the potential to the upside. Downside, I think it would really have to break this trend line, and that would take care of that. So for now, it's in a sort of a binary position, as far as I'm concerned. Looking at the weekly bond, similar situation. Look at this, tight little triangle.
We're almost into the apex.
We're almost into the apex, and I'm not sure. I mean, clearly we could compress in here for another month, and
sure,
it'd be okay. But what we're doing is we're pressing really up against this downtrend line. We did a break, came back, a little skittish. So if we take out these highs from last week, again, we're going to be above the break, right? So it's possible we're setting up some kind of a sloppy move higher. And watching the numbers that we talked about on the daily will help us, again, gain which way it's going to balance is shifting to. But here, for now, we're still inside this. And that's why we have to really watch it here, because of all this compression for about a whole year, when it breaks, there's a good potential it can run and not just be sloppy. So these are the things we need to be aware of, right? And so I want to bring it up.
Yeah, and the message, this fits with the message from the charts too. If bonds resolve bullishly, it sort of fits with the message of risk off. Like money wants to go into safety, so it's going into bonds, and it's definitely something I'm listening to and watching intently this week. And bonds are one of the charts I want to look at. So,
just a simple ABC would get us out of the range, and after it gets up there, it's in bullish territory.
No question.
Right. So that's around 170. So it's definitely something to watch actively. Next one would be the crude chart, which
great call on the high, boy. Look at that time and price right there.
Time and price, beautiful thing. And it happened in the weekly too, right? So those are things you really want to watch. So if you guys have been watching this for a while, we called out the high here looking for weakness, and we got that even with the pullback and the retest at the same level. And last week we talked about the 77 being the next support level on the way down, and Thursday, Friday we tested that, and it seems like we got a little bit of a bounce off of it, but no guarantees, right? Not yet.
Oh, that's right.
If we can manage to sort of trade a few days up here, we can see how it ends up. But for now, 77 is key support, and we want to see a little bit of price action to show if it can be held. And people might not have the 77 the way we get it, but they do see this old high here. And we did come in, retest it. So it's kind of a normal pullback. But we'll have to see how the square, plays out. Once one of these cycles end, it could be a small, quick consolidation or pullback, or it could go on for, 3 months. So this, for now, looks like the support held. So we're expecting it to hold and maybe go up and test the 82 level next week. That's what we're looking for. And that's the bracket for next week.
Mm-hmm.
Looking at crude, the weekly, again, here's that big square that we talked about a few weeks ago. And prices sure didn't, get through that and traded lower as expected. Again, now it's on a support based on structural support, and 77 be the key. We'll just see how it plays out next week. Not much to do here.
Mm-hmm.
Moving on to gold.
Bullish looking chart.
Very bullish looking chart. Not a whole lot of follow through last week, but it was okay. It was better than the other way around. So
For sure.
so far as levels go, 1850 is a key level to watch for next week. We really want to hold above that. 1832 is okay, but we really broke above that, and 1850 is a level we really want to watch now. And to the upside, 1887 has a little bit of resistance, but 1915 would be the key level to watch on the upside, and we could get there in a hurry. But those are the levels we're watching, and the bias is to the upside long as we're above 1850.
The ideal would be a pullback that checked that 1835 and held, and then you could buy against that. That would be the best.
Here.
Yeah.
That would be good. That would be good. But the fact that the buyers are coming in here and supporting that level, 1850 is pretty decent.
Yeah.
At least last week. So we could easily jump from here without giving any chance, right?
No question.
But 1850 is really important. And if we can get through 1887, it's even more bullish. And then 1915, if that goes out, then I think we're going to run.
New highs.
Like a real run.
Yeah, agreed.
So gold weekly, going back last week, we looked at the compression that's been happening for a while. And it's funny, if you don't look at the weeklies, you're going to miss these, the bigger picture. And we drew up a little square, and I can't remember what I said about that, other than it's probably going to go and test it.
Mm-hmm.
Is that what it was? Yeah. Yeah, I think that's what it was. So anyway, we were talking about that being the resistance because we have the other line coming through.
Sure.
And that it might go up and test this area around 1890 or so is the upper boundaries here. So it looks like we're on the way, and we're in the target zone. So it looks like there's a little bit more upside left. And the fact that we broke to the upside so far, it looks very clean and bullish, right?
After a year's consolidation,
can't say it's bearish.
Yeah, no, that's a good formation, and I'll talk about gold as well. One of the things I wanted to remember, I forgot to say in the beginning. Please, if you enjoy the content and find it useful, make sure to like, subscribe, comment, do all the things that YouTube wants you to do. That would be a big help to us. Appreciate that.
And let's go back to the daily charts and take a look at the dollar. We've been bullish.
You've been all over the dollar. Really good call on the dollar.
We've been on it. And, we're at a place now, 95 was the target for a long time when we were down here in the early part of the year. And now that we got here, I think the half square would be the place to really, really watch to see how strong it is, or at least as a measure of the strength, right? So that 95, which used to be resistance, and now we're going to look at it at a support level, especially with the half square being right there.
Mm-hmm.
So while the dollar did hit some resistance,
From your
square
channel
line
line. Yeah.
and the channel and the square lines, the key to watch now is to see if we can hold above the half square, which is roughly, we want to make sure it can hold above the 95 level on any pullback. And if it does that, I think there's continued upside pressure even from this level, right? But even if the dollar comes back to the main trend line, that's still bullish till we break this. This is a solid upside channel, upside trend line. So all coming all the way down to the retested is still bullish. By here, we're just going to look at the 95 for the short term to hold for support.
The other interesting thing about the dollar, Barry, is that with the dollar as strong as it's been, gold and silver are breaking out. And that is a really bullish sign for those metals.
Right. So there's the dollar. Let's take a look at the weekly dollar chart, which is, we were looking, seem to have a line here. So that's 96.50 was the next level we were looking on the weekly. And not quite there. We also have a little bit of, this fork going down. So I would expect this 96.50 to be the next resistance level, as long as we can hold this 95. And that's sort of the bracket. And looking at the weekly, this is sort of straight up, right?
Mm-hmm.
And we're not squaring out here. We don't have any squares running one way or the other. So it's basically free to run. And that's why we want to watch, in the steep angle like this, the steep climb, the pullbacks should be tight and short. So that's why we want to look at the 95, because that would be sort of the expected pullback. It would be normal to come down to here and hold it and make another run back up. Right?
Absolutely. Yep.
Looking at the euro, which, we've been on this. It's the upside, flip side of the dollar. Basically, we've been, bearish ever since.
Man, look when it gave up that square. Look at the action after that.
Yeah, it was just slipped right out, right? There was nothing there. But this low is kind of interesting, although I like to use the latest high to sort of track the structure. If you take the square up to the high, we came down to the half square here.
Mm-hmm.
It was possible we have some temporary support. And just like, the dollar sort of ran into some kind of minor resistance up there, possible that we have that. And either way, any kind of retest, we have a long way to get back into a sort of an uptrend for the euro. So I'm expecting it to sort of consolidate in here, at least for the next week. And we can take a look at it, look at the price action afterwards. That's all I have. We covered the S&P. We looked at the key cycle here.
Sure.
So let me put it back to you. Cover the commodities. There's a NASDAQ.
You and I always talk about, in this game, you got to think like a criminal to survive. If you look at the NASDAQ chart, you think everything in the world with risk is fine. There are no issues. This is a beautiful chart. It's very bullish. We're holding that trend line. I mean, look at that. How many days did we hit that trend line? 4 or 5 days, almost a whole week of trading, and it held, making new highs. We're above the square. There's no problems in the world with NASDAQ.
Right.
The issue is it's a handful of stocks that are driving this. It's exactly. Microsoft, Google, Facebook, Apple, Netflix.
And if you notice, the broader market couldn't keep up.
No. The broader market has not kept up, and you were showing that in the S&P, how we were struggling at the high, and we were, back and forth and up and down, but not able to clear it. I mean, and this thing is up and out. So to me, this is a sign of trouble. It's a misdirection, if you will. Mask the selling that's going on underneath the surface by keep pumping these 4 or 5 stocks and keep this index higher. So if you're trading the index, obviously it's bullish. If you're looking at the bigger picture, it doesn't look super healthy to me from a bigger picture sort of macro standpoint. Yes, they're gunning NASDAQ and they may continue to do it. But what I'm seeing in the commodities and what we're seeing in the various markets we look at is, best case scenario, a pause, profit taking, sort of stepping aside a little bit, raising cash people are doing, big money's doing. Worst case scenario is they're leaving the party. And this is something we're monitoring and watching individual markets to see what the actual story is. Anything you have to add on NASDAQ? I know you've been looking at Apple and Facebook and Netflix and Tesla. Anything you have to add?
Well, I know a lot of, other than all the blow off patterns, and those things can continue longer than I would think, or we can imagine.
Mm-hmm.
A lot of those squared out. So we're, this could be, instead of a failing kind of a pushing up here. Like you said, I think it's a bigger pattern we have to watch. Not that we have to go short the NASDAQ. I think this is bullish and you trade the direction till it's done.
Mm-hmm.
But for now, I think there are some amber lights starting to show up on different charts and different connections that we see normally to be green, and when everything's functioning. So there are some, small cracks and things starting to show. So I would be cautious, especially if you're all margined up to the teeth.
Right. And not that you shouldn't have your head on a swivel at all times when you're in a market.
Mm-hmm.
Especially now, you must be, really diligent about your positions, because there, as Barrie said, there are amber lights, there are flashing red lights and caution signals that we're picking up through this chart review. So just keep that in mind.
And Ben, just like you said, you guys, if you like the stuff and if you enjoyed the show, please hit the likes and share with like-minded friends and leave a comment and maybe hit the bell, I guess, for alerts when we put up a new video. And we're also planning on doing different types of videos and a little bit more for short-term traders and also maybe for currency traders. So that's coming up. Well, if you hit the bell when those things are up, you'll hear about it. So thanks for the support so far and all the likes you guys do.
Yeah, we appreciate that, and it's great to get that kind of feedback.
Mm-hmm.
As Barrie mentioned, he went over the bonds. Bonds are one of the charts I wanted to highlight because of the bullish potential I think we can see here. And it's interesting because I kind of, in addition to looking at the charts, I always want to look at the macro picture, like the big picture. Where's money flowing? What are the charts telling me in terms of where money's moving? And at the same time, we're seeing this cashing in of profits and risk off, sort of beginnings of risk off moves in various commodity markets. Both Barrie and I are getting signals that the bonds could rally sharply. And that fits with money looking for safety, interest rates going down, bonds going up, people moving into sort of safer assets. So it's nothing that's definitive, but it's something to keep in mind, that the flows and the charts are pointing to that sort of risk off scenario where money comes out of risk and goes into safety, like the 30-year. So the interesting thing about the 30-year here is we, in early November, we got stuck under this full square when it looked like we were going to go up and out and make a nice rally and take out these highs. We failed there. We came back. We found support exactly where we should, which is on the half square. And since we made that low, I think it was like Monday, Tuesday in the markets, on the bonds, we've had a nice reversal up and a strong push higher. I think bonds are in a bullish position. If we can exceed the high we made on Friday, to me, it looks like we're up and out, and we're going to minimally test this full square, which is in the 63.17 area. And then if we can take out these previous highs from early November, it's this other half square up here in the 67, 68 area. So I have bonds on the radar based upon the price action we've seen. We've talked about this previously. You got a low, you got a higher low, you got another higher low, you've got higher highs. This is how it sort of starts when a big move and a fast move's coming. And I think the 30-year Treasury is setting up for a potential fast move if we see some more strength this week. And Barry, you covered bonds, but anything else you want to add to this chart?
Well, just that we talked about that apex trade, where the earlier triangle between August and October sort of broke down, and then we rallied up into that apex in the November high. And the fact that that didn't sell off and we're coming right back to test it, sort of signals a stronger market. So it's possible if we take out that full square right above, there's definitely potential to run. It's something to watch as a pattern, right?
Absolutely.
Yeah.
Yep. I agree.
Mm-hmm.
So here we have gold. This is also another market that Barry talked about. I'm highlighting it because if everybody that's been listening for a while knows, I try and review all the commodities and then condense and put onto the show markets where we feel like they have a strong potential to move in the coming week. Not in the next 10 months or 5 months or anything, but we're looking for, moves coming in a relatively short period of time. And gold is one of them. We've been highlighting gold for a few weeks. When we made this spike low, we thought that was a good low. We rallied up to the full square, couldn't do anything, came down, got below the half square, but really couldn't clear it. Went right back up, sat on top, and now we've moved above the full square. And this was the key level for turning us bullish on gold in the short term as well as the intermediate term. This 1830 to 1835 area. So we've come above it, chopped around here for a week or so. Love to see it if any pullbacks can stay on top of this area. If it does and we get some kind of reversal, it's setting up for a fast move higher in gold. So I'm very bullish in gold. Would love to see it hold this area. If we come back into here, remember markets always push a little more. If we come back in here and test this eighth square here, that's okay, because that would be sitting on top of these highs. But gold is in a bullish position. If we can see the character of this pullback in the next reversal, it can give us big clues as to whether another fast move higher is coming.
Mm-hmm.
Anything else to add on gold?
Yeah, I think that full square line is the key area to watch there on that chart.
No question. And that's 1830 to 1835. Also, all these levels are on a spreadsheet that we keep, a Google Doc, which we post the link to every week. So if you can't remember the levels or get the levels and you want to check out the spreadsheet at any time, just hit the link and you'll be able to see all the levels here. This is gold's cousin, silver, also a market that's in a bullish position. We made this false break low that sort of took out all the lows of the consolidation we've seen for the last year. Let me pull that right a little bit so you can see that and have the perspective. So we made the high in August of 2020, made a false break high in January, and these are the lows that we were watching when the market was coming down, saying, listen, I wouldn't be surprised if it came down, took those out. And if we could do a false break, that would be a bullish sign. Well, it's exactly what they did. They took out these lows. Anybody who had their stops under here got smoked. And then we held on the half square, pushed up, went above, came back and tested it, and held. That's what you want to see in a bull market. Get above a square, come back and test it, and then push up to the next level. Now this past week, we chopped around at this half square. We closed under it. Still a bullish market. We're watching the character of this pullback. again, if we can hold in this area or hold this trend line and then push up and settle above this half square, you're looking at the next target is the full square up in the 26 3/4 area. So silver, I think, just like gold, did a bit of a washout move. This is the first push up. We get this correction and this pullback, and it holds and giving us another higher low. We're in line to catch a fast move higher in silver. Anything you got to add on silver?
I think we covered it. We're good.
Okay. And the last one, and this is kind of telling. I'm only covering 3 charts today. And this is the fewest, or 4 charts. This is the fewest number of charts I've covered since we've been recording these shows. It's because we've been taking profits, as Barrie said. We took profits in wheat, we took profits in coffee, cotton, we took profits, crude, we took profits. The markets are telling us through the charts that they're at points of resistance. Now, this doesn't mean that we're not going out and shorting all these different markets. They're not going to, we're not saying they're going to collapse, but they've reached a point where it makes sense to take profits because they're going to move into a consolidation, or some of them, may correct pretty substantially. We don't know. We just know that we're selling at points where there's good resistance, squaring out of price and time, telling you that something has ended, something has started. What the something has started is, we don't have enough information to know yet, and which is why you step aside, especially when you're dealing with instruments that have a theta burn or a time element to them. And we're seeing that, which is why I'm only covering 4 markets today, and the fourth here is natural gas. This is one where we caught the big move coming off these April lows. Took our profits, as we hit this square here. Always, you don't take enough profits when it corrects, and you don't have enough when it launches. So left enough on to where we can sit here and say, damn, we should have sold more. But the point of putting this chart up is we've been correcting now since September, so almost 2 months, and we're getting a point and getting some sort of signals from the chart that accumulation is starting to occur. You can see here, it's hard to see on the daily, but when you go down to other time frames, we had a false break low here, sharp move higher on it, pull back, and so far we've gotten a higher low. So this series of the signal that we look for, which is higher lows and higher highs, is beginning to start to appear in natural gas. When Barrie and I were talking, we were saying, the key level here is this 508, 509, 510 area. As long as we can settle above that and sit on top of that full square, and notice where we closed on Friday, right on that square. It's not a mistake, right? So as long as we can settle on top of that, it gives us, good odds that we're going to push up and test this half square around the 568, 570 area. We get on top of that, we're going to look at the full square again, which is, 6 1/4, 627, 628, and potentially, breaking out for new all-time highs. So this is on the radar. Just like the 30-year, just like gold, just like silver, we have to see how the pattern plays out. But there are signs that accumulation may be starting here, and we could see a fast move higher in natural gas, and that this sort of fourth wave correction that we've been experiencing for the last 2 months may be ending. Anything else you have to add on natural gas?
Well, just no, I think you covered the sentiment pretty well. Just waiting to see a little bit of strength in here. That's all.
That's right. And so where we are in the markets, I mean, we've kind of talked about it several times. We're at a pretty pivotal spot, it seems, for risk. We are watching things closely. watching these patterns play out and paying attention to the levels, because it's a critical time from a cycle standpoint. It's a critical time. The charts are telling us it's a critical time. And we, as I said, if you just look at something as simple as like, how many charts did I put up here about movement and things that we're setting up? This is the smallest amount I've done. So that in and of itself is sending a message. This week, we're at a holiday week, with Thanksgiving. So it's really going to be interesting to see what kind of price action we get in all these different markets. I mean, what are you focusing on this week, Barrie?
Most of the S&P and watching gold, looking at crude to see if that 77 level is doable.
Mm-hmm.
Well, those are the main things that come to mind. But, we're scanning pretty much everything all day. So,
yeah, there's no question. So check the spreadsheet. Make sure you like and subscribe and ring the bell on the video. Add some comments that would be appreciated, so we have feedback for what we're doing is valuable. And we will talk with you. We're not set yet on whether we're going to do a show next Saturday, because it is a short week with the holiday, but we'll be active on Twitter either way, and posting updates there to levels and different things we're seeing in the market. So have a great week, Barrie. Have a great week, everybody, and we'll talk with you soon.
Thanks, Ben. Have a great week, everybody.
Take care.